Alrighty guys, what is going up? Welcome back to another episode. In today's video, I really want to talk about why I am buying more Disney stock. So I hope you guys enjoy it. If you get anything in value, hit that like button and subscribe. If you guys have any questions or concerns, go ahead and ask them down in the comments. And if you guys want to learn more about investing in the stock market, go ahead and check out my course. And you guys can use promo code DIVIDENDS to get 50% off. So at least check it out. It's definitely worth it. We talk about fundamental, technical analysis, how to find undervalued stock, taxes, everything you need to know for investing in the stock market. I'll put a link to that down below so you guys can check it out. And don't forget to check out my merch. We dropped some merch, guys. We have t-shirts, hoodies, fanny packs. We have it all. Crew necks. Make sure you guys check that out too. So now, to jump into it, roll the intro. Let's go. Bam! Now, for those of you that don't know what Disney is, you must live under a rock because Disney is probably the largest media company in the entire world. They own a lot of stuff. They own Marvel, Lucasfilms, National Geographic. They own a lot. Look at everything they own right here. So it's pretty crazy on how much market share in the media industry that they actually own, which is crazy because you would think that they are a monopoly, but they're not. Now, Disney last year in 2020 lost literally billions of dollars because their parks had to be closed. So Disney was freaking out, thinking that they're not going to have enough cash on hand to get through a rough time, because cash on hand is probably one of the most important things in a company, because you want to make sure they have enough cash on hand to get through a rough time. And Disney was freaking out, saying, we're not going to have enough cash, we're not going to have enough cash. But the thing about it is, a couple months prior to that, Disney launched Disney Plus. And at first, it didn't really hit the ground hard, but over a couple of months, and then right when the lockdown happened, a huge spike in Disney Plus subscribers hit the market. And when that happened, that outweighed the loss of all of their parks being closed. So I really think that definitely carries a lot of long-term potential. They are the largest competitor with Netflix. They have over 94 million subscribers. Million, yes, million. So they are bringing in literally almost $1 billion every single month, which is crazy. Now, when Disney was nervous about all the cash, they had to cut their dividends. But me personally, I really believe that in a couple of years, maybe 2 years, they're really going to re-announce the dividends and honestly make that stock even go up, because when people realized that Disney cut their dividends, they sold their shares because people are less likely to hold a stock that isn't paying them cash. Now, that's why historically dividend stocks really don't get hit as hard in a recession, because people hold them because they pay them cash. But getting back on track with Disney, me personally, I think that Disney does carry a lot of long-term potential. We have increasing number in revenue. Yes, the revenue did get slowed down because of the lockdowns, but I think that in a couple of months, once things kind of open up again, people feel more comfortable going out. It's just a matter of time before those resorts start seeing the numbers that they did. On top of it, I believe that Disney Plus is only going to get stronger and stronger and stronger. Now, number 3, I believe Disney is going to be getting a ton of money from their Disney Plus because they are now going to have exclusive content on Disney Plus, like WandaVision, like Loki, a lot of these Marvel shows that people love because they bring billions of dollars to the box office. Now, those people are going to say, hey, I want to watch this on Disney Plus, and then they have another member. Now, the last and final thing that we're really going to talk about on the fundamental side is all the new blockbuster movies. I believe in 2021, Disney's going to have great numbers in the box office. And they could be announcing these on Disney Plus like they did with Onward and a lot of their other movies. If they just put them on Disney Plus, people still had to pay. And on top of that, they got another member for that month, which is amazing, to be honest. So I really believe that in 2021, they're going to have a ton of blockbuster hits, making the revenue go up even more. Now, one of the things that does concern me a little bit about Disney, and I'm completely well aware of it, is they do have a little more long-term debt than I would like. They have around $52 billion in long-term debt. And the thing about it, companies take on long-term debt all the time to grow the business. At the end of the day, Apple has long-term debt, Amazon, Microsoft, almost every company does. But you always want to make sure that they have quite a bit of cash, if not more cash than long-term debt. Disney doesn't have that. They only have $17 billion in long-term debt. That's not very good, but obviously with increasing revenue, I think that they could start saving a little more cash here in the future. Now, obviously, I definitely believe that Disney does carry a lot of long and short-term potential. Now that we kind of have a good understanding of some of the fundamentals, now let's actually look at the technicals, support, resistance, and my price target for it. Let's check that out. Alrighty guys, so we have ticker symbol DIS. This is Disney here. You guys can see that the company does have lows here at around $108 and highs here at almost $200 per share. Now, you guys can see that this little blue light bulb is an earnings report. So you guys can see on all the earnings kind of what happened here. So you guys can see good earnings, and here it does look like we did get a little sell-off and then a pop on the earnings, little pop on the earnings. So obviously, with the earnings, a lot of people love to buy into this because of the Disney Plus subscriptions. And obviously, look at every time, these earnings happen. Boom, and then buying pressure. All the way in here, boom, buying pressure. So it hits it, we do get a little of consolidation, if not a little sell-off, and then buying pressure within the next couple of weeks here. I think that overall momentum is going to continue here. And my price target for 2021, late 2021, December, October, is going to be around $230 to $220 a share. I think that's a very, very real expectation that we could see Disney hit. You always have to think about, okay, we have the Disney Plus subscription that makes up for a lot of Disney's revenue right now. On top of it, once they start having parks, resorts, cruise lines open, it's just a matter of time before we see the revenue that we saw in 2019. So that's kind of my idea with it here. You guys can see it does have some overall very, very strong resistance that would now act as new support here at around 185, resistance here at about $200 here. So that is the overall technical side of Disney. So that is it though. I hope you guys enjoyed the episode, and if you did, hit that like button and subscribe. If you guys have any questions or concerns, go ahead and ask them down in the comments. And if you guys want to learn more about investing in the stock market, check out my course, and we'll see you later. Take care. Bam.